Hey everyone, and welcome back. Now today I wanted to talk about Base and ask the question, is Base going to be the solution to saving ETH? Because obviously as we've seen lately, Ethereum has really been kind of struggling, and as we'll see here in a second when we go over some of the technical analysis of what's going on with Ethereum, it's actually been struggling pretty hard lately and is actually sitting in a relatively precarious situation. So let's go ahead and dive right in and talk about some of these things that are going on within the market. So first off, as we can see, we did dive back into neutral for a couple of days, but we've since come back into fear. So, obviously we did see this little bit of pump. That's what brought us into neutral. And then, as prices kind of pulled back a little bit, we've started to see the fear come back into the market. So, overall, I don't think anything has really fundamentally changed at all in the market, probably since the beginning of August. It's all kind of, similar types of things. We'll see a couple, short-term pumps here and there, which will boost the fear and greed index a little bit, and then it'll come back, stay uncertain a little bit. Again, we'll have a couple, pumps, it'll boost it up a little bit, and then we'll come back, same type of thing. So, I think where we're at is still kind of par for the course from what we've seen so far. Ultimately, looking at Bitcoin and, possibly Solana and some of these others, it's not looking that bad ultimately, but with looking at Ethereum, definitely the longer we stay in this type of market, things look bad for Ethereum. So if we look at the chart, we can see, this level of support here is kind of like a crucial point of support. We've touched it twice now. We actually wicked past it once, and then we wicked down and touched it again in our most recent pullback. And then, obviously, as our recent pullback, we actually have just broken this like secondary point of support, and we didn't actually come all the way back down to this like kind of major level. We've actually started to pump back up. Now, if we zoom in a little bit, we can see that we haven't actually quite made it back to this like liquidity zone yet. It's hard to say if we will make it back there. This is on the daily candle, so it is possible over the next couple of days maybe we see it climb back into this liquidity zone and then potentially either break through or come back down and retest some of these, and potentially even come back and retest this kind of major point of support. As I have mentioned, if we're going to zoom out here, we can see if we break this level of support, the next main level of support is probably sitting here at about 1778, and then after that we're probably looking back here at about 1536. So a decent chunk to fall, if we break through this level of support. I would imagine, depending on kind of what the wider market looks like, maybe we settle back on potentially this $1,900 one. Maybe, it looks like it could be a level of support, and resistance at some point throughout the chart. But I would imagine, we probably break through this, hit this one, and then depending on, kind of the severity of the market dip, maybe we go back to here. Ultimately, I could even see, as we've seen over the past several months, we could even just see kind of a slow bleed down through all of these different levels of supports until we start to see something more fundamentally bullish change within the market. So, that's kind of what we're looking at right now. Obviously, when we see something like this, I don't love trading many like long trades. Obviously, it is not too bad to especially when we're range trading, to trade some of this volatility here in the middle. But Ethereum obviously is very much like has a bearish bias toward it, and so it's a lot easier to hit shorts than it is longs, especially longs that have any sort of a stability. Lately, I haven't been doing too much on Ethereum just because it feels like it's less predictable than some of the others have been lately. So yeah, I've been trading a little bit over these past couple of days, just as we've started to find some of these ranges. I feel like I tend to do better trading ranges than I do breakups or breakdowns. So as we can see on this trade, we're sitting about 128%. I did close a little bit, I think closer to like 160, 170%. So not too bad overall. Like I said, this stuff is fairly risky. So if you do want to do it and are interested, you can check out my link below, but just be careful. Ultimately, I do think as far as leverage trading goes, the Margex is really nice, and they are offering up to $10,000 in deposit bonuses. They've got the $500,000 Caspa airdrop going on, as well as you don't need a KYC or need a VPN as well. So if that is something that you're interested in, feel free to check out the link below. But as I always say, no pressure. Definitely don't do anything you're not comfortable with. So anyway, moving on. Essentially, a lot of the weakness that we're seeing with Ethereum is mainly due to layer ones, right? Or the layer one, I guess I should say. Mainly because it's expensive, it's slow, and at least previously, it wasn't super scalable. That's why it was so expensive. And so, Solana has taken over, I think, a lot of the attention lately because of some of those issues that Solana has been able to solve. Solana is a lot faster. It's a lot cheaper. It does have some like transaction failure issues, but I guess, ultimately when there's no great solution, you kind of just have to take the best of the maybe less than ideal solutions. So, however, one thing that I do think could potentially change all of this is Base and even just the Ethereum layer 2s more generally. We've got Optimism, we've got Arbitrum, Polygon is going to be another one that's coming in here soon. We've got Base. I mean, there's a bunch of really, really well-funded and pretty well-developed layer 2s that are on Ethereum. And so this is something that I think could potentially impact things. However, I will say, in my mind, at least the biggest one, at least as far as attracting retail attention goes, is Base, just because this is kind of supported and funded by Coinbase. And we'll get into some of the stats a little bit later, but obviously Coinbase is by far the biggest exchange within the US and also does have a relatively decent global presence, although definitely second to Binance, I would say. But overall, Coinbase is a very, very large platform and ecosystem. And so having this layer 2 that is essentially built around their infrastructure is very, very bullish and also very, very good. Also, one thing to remember, Base is kind of an example as to the layer 2s and tokens. Obviously, Arbitrum, Optimism, a lot of these layer 2s have their own token, but Base actually does not. You just use ETH on Base. And I think that this is kind of an interesting take and quite possibly one of the really, I guess, fortunate things. I never thought I would say this, but maybe one of the fortunate things about the US securities laws is because I would almost guarantee you the reason Base does not have his own token is because that would be a securities issue that would quite probably get Coinbase in trouble with the SEC. And so Base obviously went and decided to launch without a token. And I think this is actually kind of interesting because I think it kind of proves that, like, why do you need something other than Ethereum to trade on Ethereum, right? And so this could potentially be a reason that Base has become so popular, is because people who are in Ethereum want to hold Ethereum and want to trade Ethereum. They don't care about any of these other layer 2 tokens that are sitting within some of these ecosystems. And in my mind, we'll take a look into this in a second, but in my mind, some of this is artificially inflating a lot of their ecosystems as far as the value sitting within that ecosystem as well. So, obviously Base is one that has really kind of provided a lot of retail or mainstream attention toward Ethereum L2s. We can see, 10 times cheaper. They got $130 billion of assets. They're powered by Coinbase. They use the OP stack, so they are kind of tied to Optimism in a way. And so this is essentially almost provides kind of like the benefits of Optimism without needing like a layer 2 native token potentially as well, which is definitely something worth looking into. So moving on, I want to discuss some of the layer 2 stats. As we can see, stable coins on Ethereum layer 2s have actually broken $10 billion at this point. Transaction counts continue to trend up. We obviously did see a little bit of a pullback, but the trend is still definitely continuing upward. Now, if we look over the last, actually this is all time, we can see that Base continues to massively outperform all of the other layer 2s as far as weekly active addresses and essentially people who are interacting on the platform, right? I mean, Base is 63% of the total weekly active addresses, which is kind of insane. that is definitely a decent chunk. And then if we look in terms of block space, 3 of the top 6 are on Base, and 5 of the top 6 are on the like OP stack, you could call it. So definitely something pretty interesting. Also, if we look at total value locked, we can see Arbitrum still is number 1, but then Base is about half of that, and after that it's very, very I guess we can see here, let's pull in Optimism as well. So essentially it's Arbitrum, Base, and Optimism, and then very, very distant like third or I guess 4th and 5th after that. I guess it would probably be Blast. I don't know why some of these are excluded, but after that it's Blast and then Mantle and then Scroll. So but again, as I mentioned before, yes, there is a ton of value within Arbitrum, but some of this is going to be the Arbitrum coin as well. So, Base in itself doesn't have its own coin to like boost its value, right? And so this is all pure just like assets on chain, which is really quite impressive. And honestly, over time, I would imagine that Base probably still continues to come up, and Arbitrum might continue to kind of bleed back as we've seen over time. So, again, I don't know, this is not financial advice, but it would not surprise me if this were to continue to happen. And the other thing we can see is this is a CoinGecko article that was made about, I think about 4 or 5 months ago. Yeah, on April 15th is when it was made. And we can see, here's a DeFi Llama screenshot, and we'll see here in a second why I want to go over this, but here's a DeFi Llama screenshot of about 161 million of total value locked within the Base ecosystem. Now we can also see here that here's the big thing that is like playing to the heaviest advantage of Base, the 100 million verified users. That's a lot of users, and so just naturally, if Coinbase continues to integrate the Base chain into their Coinbase app, I mean, that's 100 million built-in users that are going to be, at least at some level, interested in what's going on the Base ecosystem, which I do think is pretty interesting. So one thing I did do is I also went to DeFi Llama. We can see, at this point is 161 million of TVL. Now we can see about 1.6 billion of TVL. Now this is not like total. I don't know the difference here on DeFi Llama of like how this is 1.6, but then we see on here it's about 6 billion. But you can also see that like within here, there's almost 3.5 billion of stable coins on the Base network that doesn't get included into this. So if I had to guess, this is probably like, I don't know, maybe this is just like assets within Base or something like that. I'm not exactly sure how that works. But what we can see is, this is 10x what it was 4 months ago when we saw it. CoinGecko creating an article on this, and we can see that we've had a pretty large boost over the past several hours, and then we can see what's taking the most like block space and what has the most TVL. So obviously ARBITRUM, Uniswap, Extra, Aave, Morpho, Beefy, those are kind of the biggest ones in terms of TVL. But ultimately we can see there's a ton of growth and improvement and development happening within the Base ecosystem. And I would imagine that, over time, obviously, Ethereum is not in the best graces of a lot of people right now. But I would imagine over time, it will continue to come back, especially if this whole layer 2 idea is actually going to start playing out. I think, as I've mentioned before on the channel, the biggest risk with this whole layer 2 thing is fracturing liquidity. If, like, for example, Polygon's ag layer figures out a way to continue or like to prevent this liquidity from being fractured within like this layer 2 ecosystem, then I think that will be game changing for Ethereum, because then ultimately people can build out any chain, like however niche and custom and whatever they want, without actually taking the risk of fracturing the liquidity and needing to build a bridge and a DEX and all this other stuff that you currently need to build when you build another layer 2. So to me, that seems to be kind of the biggest hurdle to currently get over, is how do we keep liquidity from continually being fractured every time a new layer 2 is spun up. That to me is kind of the crux of the issue. Right now, I think Base is in a good position to kind of use some of their clout and their built-in like retail interest to help bring eyes back to Ethereum, but a lot of these innovations need to be there to help, I think, kind of continue the momentum. So hopefully you found the information in this video useful. If you did, please do like and subscribe. As I mentioned, I've got a new goal. I'm going to try and push to hit 10,000 subscribers by the end of the year. It's definitely a tall task, but I think I can do it. So if you do want to help, a like and subscribe really does go a long way. So also, if you wanted to get in contact with me or have any thoughts, questions, feedback, anything like that, feel free to drop that in the comment section below. Comment section is probably the best way to get a hold of me. So I do read and respond to all of my comments as well. So anyway, thank you for tuning in. We'll see you in the next video.